relationship with Reuters goes back many years through our time as part of Thomson Reuters and beyond. As a data provider to the world's financial markets, Reuters' breaking views in general and the predictions events in particular is something we consider very important to be part of. India was recently rated very highly among the breakout economies globally as part of the Digital Evolution Scorecard developed by Tufts University's Fletcher's School in partnership with MasterCard. The strong momentum towards becoming a digital economy has been driven by fast growing internet access, which has doubled in the last 4 years. And with proliferation of smart devices, we are on track to add another 350 million smartphones by 2023. A key component of India's digital story is how it has powered the reach of last mile financial services and pivotal role played here by the banking industry. Personalized products and services based on derived insights and high quality customer data have seen substantial uptake in the last few years. Through established banking players have opted for a traditional high touch service model in the past, the COVID-19 pandemic has provided a litmus test for banking experience to evolve into a low touch, high tech model. A key enabler of this swift transformation has been an access to reliable and real time structured data, which has helped the banking and financial services sector manage liquidity challenges, mitigate credit risks, and cushion the impact of the crisis. On the other hand, neobanks have also recognized and the changes in the customer expectations, prioritize investments in customer experience, and enabling technology and build operational resilience into the business models by analyzing available data. Having said so, there are several areas of intervention in refining existing offerings, and as the staggering complexity and pace of regulatory changes, finding smarter ways to address regulatory and compliance issues while balancing business and innovation. COVID-19 has been a mammoth challenge, perhaps the greatest we have encountered this century. But as the market once again gains positive sentiments with the vaccination news, I believe now is the opportunity to envisage what will fuel the growth of the changing face of the banking industry and harness the advantage through the insights shared at this event today. With that in mind, I would like to turn the virtual stage over to Mr. Aditya Puri, until recently Managing Director and CEO of HDFC Bank, and the Reuters Breaking Views India editor, Yuna Galani, for what I'm sure will be an insightful session for all of us. Thank you once again giving me the opportunity to address you today. Over to you, Yuna.
Thanks. So hi everyone, I'm Yuna Galani, Associate Editor with Reuters Breaking Views, based here in Mumbai. I'm joined today by Aditya Puri, the Managing Director, boss of HDFC Bank for 26 years until he stepped down from the position in October. Thanks for joining us, Aditya.
Welcome.
You've established an extraordinary legacy. You've built this bank up into $110 billion market value. It trades at 4 times book, makes it one of the most richly valued lenders in the entire world. And it's, most importantly, perhaps, that's a reflection of its world-class governance standards. So, you know, you really got quite a legacy and you've done a lot of work. So how are you enjoying your retirement?
Well, I'm partly retired, partly working. And so there's some new areas of interest that I found for myself. I had said along the same way as the country, I wanted to look at healthcare, also digitizing financial services more so that they could go into the interiors, and education. I made a beginning in healthcare. So if you know, as you know, that India is the pharmaceutical factory for the world, but the biological space, it's a new player. And biopharmaceuticals are expected to account for 35% of the pharmaceutical industry turnover, which is about $50 billion by 2025. And so I've been researching that, and there is a company called Stelis, which is one of the few players in this place that has established the infrastructure and now wants to build global scale. And I talked to Mr. Arun Kumar, who runs it. And it was almost like HDFC Bank all over again, because he wants to build a world-class organization based on corporate governance, good products, cutting-edge technology, and being a good citizen. So I've invested as well as become the director and maybe chairman a little later. And I'm quite thrilled that we will be able to do that. I'm looking at taking healthcare on an online, offline basis. I'm talking to 2, 3 companies, and that should come through. I'm looking to change, help people change to manage in the digital world, because now you have hell of a lot of connectivity. And what that does is it eliminates barriers of geography. It blurs the competition. It shifts power to the consumer. You also have a situation where there's tremendous automation. So the old management models, processes completely need to change. And then you have a tremendous reduction in cost of operating, which reduces the entry barriers. And finally, the younger population has different career aspirations. It has the digital native. And so there's a major transformation required. And for the companies that don't do this, they're in trouble. So I think I work half the day and half the day I enjoy myself. So I'm having a ball.
Good for you. I'm glad to hear that. Actually, I'd love to ask you a bit more about the health stuff, but we'll come back to that.
Yeah.
I mean, just sort of starting with the big picture, really. I mean, every country around the world at the moment is trying to make the most of a crisis. Do you feel that India has made the most of the crisis that has been brought around by the pandemic?
Well, I mean, I sound biased, but I think so. So if when you take the pandemic and you take a population of 1 billion, we probably had the most gigantic problem and a substantial amount of overcrowding. And I think the government should take credit and take a bow that we have reached a stage where we've reached, in that today we have only about 15,000 new infections and on a daily basis, and about 400, 500 casualties, which is among the best in the world. And we're not looking at a second phase. I think the world overreacted, including us. When the pandemic came, they said India is doomed. The GDP will go to hell, the banking system will go down the tube, and there's going to be no recovery, and et cetera, et cetera. And I think God's been kind, God looks after India. God's been kind, and so the doomsday predictions, whether there was the GDP would go down by 20% and the banking system's NPAs would double and the recovery would take a hell of a long time and we would not be able to control it, I think has proved to be wrong, and the recovery has surprised everyone.
Yeah, I think that's, well, it's certainly on one level, everyday life does seem to have resumed to a sort of significant amount of normality in India, which I don't think many people outside are really as aware of as they could be. But I know that your HDFC Bank also has just reported some incredible results over the weekend. Your successor there has done that. But I mean, if we look at the sort of impact on companies, I think one of the companies that has had the most incredible year has probably been Reliance Industries. It was the biggest corporate story through the pandemic. It's been pulling in billions of dollars of money from Facebook, Google, private equity funds. When you look at this company, what do you think? I mean, what does it tell us about where India is today? How do you think about Reliance?
But this is conjecture, so it may not necessarily be right. But I think what the investors have looked at is they're looking at Reliance at the future digitized India, and they're looking at Reliance as a proxy. And so money has just come pouring in. I do believe that people are underestimating the digitization that has happened in India in terms of we have almost 500 million people on the smartphone. We have half of that on the net. We have almost the entire population connected through the bank accounts. We have entertainment. We have a lot of people using it. We have cheap data. And now people during the pandemic have really started to use this. And the conversion to technology has been much faster. The other thing people didn't look at is that our India stack, which is what NPCI and what I actually call the digital infrastructure for public good, which is the UPI and the identification through the Aadhaar and the eKYC and the movement of funds, I think is among the best globally. And so Reliance is a proxy. But if you look at what the government is saying, if you look at various organizations, Reliance is probably right at the top in terms of the digital proxy. At some point, we'll talk about, we feel we are among the market leaders in terms of digitization as well as financial services is concerned, not in India, but globally.
Yeah.
So I think uh, it must be appreciated that digitization also allows financial inclusion. It changes geography, it reduces cost. And then when you have a billion people market, sky's the limit.
Yeah, and I think you're right. I mean, India definitely has unique digital infrastructure that, as a public good, that many other countries, or large countries around the world, do not have. I mean, with that in mind, do you see Reliance as a sort of future competitor to the bank you built? We know that the Reserve Bank of India, they've got a working group. They've been talking about letting corporate houses get bank licenses.
Well, look at it this way. Number one, I believe demand for financial services in India exceeds supply by a multiple for the next 5 to 7 years. Because if you see the credit to GDP ratio, for the country, it's somewhere around the 40s. But for semi-urban and rural India, where 60% of the country lives, it's only 10%. And there are large sections of the population that do not get organized credit. So more the merrier, more competition is not an issue. I remember this question was asked to me when every Manjack and his brother said he was going to disrupt banks and blow them out of the water. And that's when I visited Silicon Valley. And basically what you look at, and so I'll come back to Reliance and the other competitors. It normally takes any competitor who starts a bank at least 7 years before he can be serious competition. But with digital, you can shorten that. So, these guys were saying you're going to be disrupted, you're going to be a dinosaur, the fintechs, and I mean, all the terminology that you have. And I went to Silicon Valley and I said, let's see what these guys are doing. So what they were looking at the payment space, they were looking at funds transfers, they were looking at loans, they were looking at mobile banking, they're probably looking at price comparison and some amount of software related to artificial intelligence. But all of them, none of them were talking about building a bank. They were all talking about the OTT infrastructure, which is over the top, which is an application which would ride on the bank's network, customers, and merchants, and then use the secular shift that came about in telecommunication, computing, social mobility, artificial intelligence, to provide a more frictionless and easier product to the customer. So when I came back, I said, why the hell should they ride on my network? I know banking better than them. I know this better than them. Why don't I ride on my own bloody network? Plus I have the India stack, and I have a brand, and I have the money, and I have the ability to partner with the changes that would happen to give them a damn good run for their money. So if you look at it, the people like Google and Apple Pay, etc., they would all like to monetize their customer base. But do they want to become a bank? Answer is no. The regulations will kill their model. Do they want to monetize for things other than advertising? Yes. How are they going to do it without crossing into becoming a bank? And that's where regulations become important. So will there be originators? Will they partner with us? We are partnering with all of them. So I don't see banks going away. I do see, as it is when I was talking about connectivity, there will be a blurring of competition when everything is connected and information is moving at such speed. Now you get, it creates marketplaces on the net with the customer at the center. So the power will move to the consumer, and whoever can give them the best offering, very good. So yeah, he could be a competitor. I have no issue. Let the corporate banks come. In any case, I'm retired, but I've got a worthy successor. And we position for that. And at some point later in the interview, I'll tell you what we've done, which really makes us into a digital bank, and then what we're going to be doing next in terms of using the cloud as well as other services and software as a service.
Do you think that, just one point there, do you think that someone like KTM, which is obviously a hybrid between these over-the-top models like Amazon and Google Pay, which I totally agree with you. We have no idea what their real business case is, but they're being disruptive. Do you think Paytm is like a hybrid model there? And do you think that, do they pose a threat to traditional banks? And
I'm very glad when you asked the question. I'm sure you heard of Alibaba. You have. It has some connections with Paytm.
Yeah,
and I've been saying for the last 5 years, don't take China as a model, because they've transgressed into almost every kind of regulation because it didn't exist at that point of time. So if Paytm is not to follow the Alibaba model, I'd be intrigued to know where their profit's coming from.
Yeah, that's a very thoughtful point. I mean, you're completely right that, you know, HDFC has built this incredible digital bank. And, but the thing about you, that's the most curious thing, of course, is that you are well known for not carrying a mobile phone or really for using very much email at all yourself. What's your, how do you do your banking?
So 2 ways. Number one, this is a question that my daughter asked me as well. So I want to tell you that the mobile phone has got nothing to do with technology other than being an access device. It is a very powerful access device, no doubt, but it's a way that you will access technology. So when I looked at technology for the bank, it is reasonably simple. In the new environment, what is our purpose stroke brand? What are we there for? That we are here to provide financial services with trust and integrity. What is the products we're going to give? And what is going to be our corporate governance? What is going to be operations? Operating, we will operate digitally with a substantial reduction in cost and improve decision making by removing layering. And then for business, just like people are moving into our business, so will I move out. So I now don't look at only a customer, I look at an ecosystem. So say I go into healthcare, which we'll come back to later. I want to be able to create a platform where the doctors, the patients, the pharmacists, the nursing home, the hospitals, the stockists can all deal through me. And we're way ahead on doing this. So between the ecosystem and who has data, you know, everybody says that he has data, but you must understand the quality of data. If somebody buys an air conditioner, what does it tell you? If you don't know very much else. But if you deal with a bank, I know which golf club you go to, I know what you drink, I know what you bought your wife, I know what you eat, I know where you spend, I know your car. Now we're talking data.
So I think what you mean to say is you outsource your banking responsibilities to somebody else.
I don't know. So what will happen is that we are actually moving in partnership. I no longer call ourselves only a bank. We are a financial services provider, which will provide you frictionless service, zero hassle, and I will meet all your needs. So you can do your banking with me, you can take a loan from me, you can do all your shopping. If you want to buy an Apple phone, Una, I hope you're in India. I hope you know the cheapest place you can get it is HDFC Bank. If you want to buy a TV, you come to HDFC Bank. You want to do grocery, you come to HDFC Bank. You want to buy any damn thing, and that's what we've done with the marketplace platform that we've established, which works as an aggregator that links us to various sites that provide different kinds of products. And you can deal through us in a very safe manner. You get a discount, you pay through my card, you get reward points as well. By definition, I'm the cheapest.
Yeah, it's a clever way of keeping people sort of in transacting within the system. I guess sort of on a more serious note, you know, the RBI did have to slap a sort of little ban on HDFC from launching new digital products recently because there were some technical outages. I mean, what's the main lesson for that? Not both for HDFC Bank, but also for the industry. Is it actually a result of growing too fast?
No, absolutely not. I think there was no, what was wrong is that the fellow at the data center when the electricity went off put the wrong flip. It had nothing to do with our systems. Our systems were working well. We have actually, to reduce latency, actually over-engineered. We have capacity for 3 times the amount. But the RBI said, look, we do want to sit down and have a greater discussion with you, which is fine. But there's absolutely nothing wrong with the system. It's not that we've grown too fast. The infrastructure is there. Our systems are working fine.
Yeah.
But
Okay.
going forward, when we come to the fact that as you move digital, scale is going to be very high. And over the next 2, 3 years, most people will have to move to a cloud-based infrastructure because the volumes will outstrip what your physical data centers can manage. And so we have actually, at a cost to the bank, put in 3 times the capacity that we have today across all our components. So the base system, the middleware, and the API layer on top of that, coupled with the ability to take the security measures and various access and an omni-channel process, is 3 times current volumes. Will there be some failures? Of course. So did Google, so did Amazon. You didn't hear about what happened to Google or Amazon on a flip? So just like you have problems in a physical world, you will have some problems, but as long as it's rectified very quickly and the customer has some channel to deal with you. So sometimes you might find internet banking is off, but if you can do it on the mobile or you can deal physically, then and you can get it up in 2, 3 hours, it's all right. I think both the regulators and the banking system will have to have a good discussion on this.
Yeah. Globally, the banks, one of the other, obviously the other really big issue facing the banking system globally and not just in India is sort of the stock of bad debt that is going to sort of emerge from the pandemic. Now, sort of perhaps
You're not talking about HDFC Bank, right?
No, I was about to say perhaps leaving HDFC Bank aside because
I'm glad.
because it
I
is
still have my heart there, right? So I'm glad you're leaving HDFC Bank. The next 6 months is still my legacy. Okay.
Yeah, well, let's see, let's make it interesting for people. Let's leave HDFC Bank aside for a minute because we all know that HDFC Bank is a consistent performer, and the numbers that came out over the weekend were just amazing.
With 110% provisioning and among the lowest NPAs in the world.
Yeah, exactly. So, but the RBI has forecast that there will be a lot of pain in the system.
They did, and they forecast that previously as well, and I'm sad to say this, they were wrong.
Right. So does that mean...
I'm not saying they're going to be right or wrong, but I'm saying the overly alarmist thing did not prove to be correct. And let me tell you why, and that for the overall system as well. So let's understand 2 things. That the companies that were doing well, that had a drop in turnover, could have a cash flow issue, but not a solvency issue. Number 2, there have been no large-scale layoff in organized finance. That means organized companies did not face large job losses. There have been issues in the medium and small scale and the bottom of the pyramid. That's why you didn't see the NPAs come into the retail world. The top tier corporates had more than enough money. Most of them didn't even want to avail of the moratorium offered by the RBI. It was wrongly presumed, and this is not by the RBI, that moratorium was equal to NPA. So what has happened, and the recovery would be delayed. So there was this big issue, and they said now the Indian banking system, which is already in the dumps, is now finished. Now, I'd like to add something there as well. I think when most people, you included, one of the journalists, when they talk about it, say 8% NPA, but they forget to mention that there's 6.5 to 7% provision against that. So the net NPA is 2%, which is pretty much what is there globally, and that's why the capital adequacy comes to 13%. Should it be higher? Yes, we can debate all that stuff. So the Indian banking system, is it safe, sound, and secure? My answer is yes. The private banks are capitalized at between 17 and 18%. The others have an implicit backing of the government. So is it safe and sound? Yes. The NPAs, will they go up? Depending upon which segments you're participating in for the banks? Yes. Different banks are given different estimates. Our restructuring was 0.5%. Somebody was 1%, but the maximum was around 2%. So, but what you also have to see that whenever you restructure or you took a moratorium for a customer, he should not, the regulation said that he should not be a bad customer to begin with. And there was very high provisioning, 5% for moratorium, and I think 10% for restructuring. That's a hell of a lot.
so broadly, you're saying you don't see this sort of big retail bubble emerging, this big retail bust emerging in India?
I don't see the retail bust emerging. Do I see, as you know, most of the banks have announced their results. Somebody has said he's got a 2% increase, somebody's got a 0.5% increase, somebody's got a 1% increase. But whatever increase they've got has been provided for.
I think the point about provisions sort of somewhat assumes that the infrastructure for resolving bad debt is adequate. Do you think that the insolvency regime, which has been a landmark reform over the recent years, is something that is able to clear up the bank balance sheets fast enough?
Let me step back a bit. Do I think that the bank balance sheets can be cleared fast enough? Answer is an absolute yes. Is the current system adequate? The answer is no. You know, if you take even what happened during TARP and what Citibank and JP Morgan and all did, if you created within the banks a remedial management unit, which everybody had created, and you recognize that most of the NPAs are provided 70%, and inflation has made sure that setting up a similar project is going to cost you more, like Essar Steel, the banks had to take no hit. Actually, if they sorted the thing, it would be like JP Morgan would declare great results. We would actually be writing back. Most of the banking system should be writing back. So I think the government is appraised of this. You will see by budget or thereabout a clear plans for this. Is it solvable? Absolutely. But we need changes and we need much more focus.
Do we need a bad bank?
No.
No.
See, bad bank gets you into all kinds of problems. At what valuation do you transfer? Who does the funding? Where do you get the people? But this is my view. There are people who say they need a bad bank. It's a democratic country. I guess the government will decide what they want to do. And I'm over 70, so now I don't need to bother about what I have to say. I don't want anything from anybody.
I mean, I know you say that banking in India is an easy business because demand for products.
No, I say globally. I worked in 17 countries, Ona.
Well, specifically in India, because there's so much demand and so little supply.
Yes.
But if you say that banking is such an easy activity, why do we in India see so many bank failures and so many problem banks?
You want an honest answer? I don't have a bloody clue. If you gave me a bonus, I couldn't do what some of these guys do. To actually say you go out and do this and you gave me a bonus for that, I wouldn't know how to do it. I stick to my point with reasonable. See, today with technology, you have credit appraisal systems, you have quantitative valuation, you have artificial intelligence taking into account qualitative this thing. So once you do that, the probability of default given a particular set of financials is given. And then you can settle with the customer and demand is there. So when you saw the crisis that emerged overseas, it was because supply exceeded demand and then you started to get into these basis risk derivatives and you started to put donkeys together and said, now it's in a horse, that's the subprime crisis. There's never been the necessity for that. So we don't have a high market risk. There's enough demand. You have the tools available. I do feel there's been an improvement over the last 2 to 3 years. A large portion of this NPA is a legacy issue. But do we need still a lot more improvement in terms of independence of management of the public sector, banks, et cetera, I think that's a debate you're well aware of that's going on continuously.
Yeah, I mean, some people have said that, it's a sort of, the bad debt cleanup in India is a job half done. So it sounds like you agree with that to some extent.
Yeah, I agree. And I say it can be finished very quickly with an accretion to the bank's capital.
Do you think that a lot of people say that privatization is the answer to all the state bank ills, but we don't see much sign of it. If anything, actually, we've got this catchphrase that's become common, privatization by stealth. I mean, is that sort of, how long do you think it will be before the assets of the private banks overtake those of the public banks? And is privatization by stealth like any substitute for the real thing?
See, private banks are still a dominant force. I remember when I came back to India, their market share was some 70% or something like that, and 90%. So it's taken 26 years for it to come to 70%. Another 20, but now change is much faster. I think in another 10 years, if they don't do anything, they'll be down to 50%. But my understanding from the discussions in Delhi is I think they plan to do a lot. So they do plan to make sure that the top 5 banks have all the systems, all the procedures, and all the money, and the fellows below are either privatized or merged.
Wow. So, okay. So privatization
But,
coming.
but I can tell you, I'm not into with the government contracts. This is what I'm hearing secondhand.
Okay. Well, I think your sources are probably better than mine. So, I mean, let's talk about the sort of other end of the banking spectrum. A lot of people who do any kind of business in India say talk about 3 Indias. The sort of the rich, the middle, and the bottom. Like when you think about financial inclusion in India, there are a lot of people who are poor, unbanked. They're new to credit. I know that HDFC has championed some large schemes. I think you had this thing called the Sustainable Livelihoods Initiative and things like that. But how much more needs to be done in terms of driving financial inclusion in India?
I think a lot more. I think the 2 questions you have there, Ona. When we said sustainable livelihood, what we really focused on was there was a large section of the population that was uneducated but skilled. We're talking about the weaver, we're talking about the woodcarver, we're talking about the guy who inlays into marble, we're talking about the guy who rears sheep. Now, these guys have a skill. So we said, can we get this skill together, give them the finance and make them sustainable? Now, we've done about 13 million families. We have 30 public sector banks. 13 into 30 is half your more than half your poverty if you get financial inclusion is sorted out. I know the Prime Minister has been pushing for this. So something will happen there. Second is as we get more information in a digitized world with what subsidy he's getting, for how long is he entitled, it allows you to access credit. The third, as he's moving into the banking system from the unregulated, he's building up banking history. So I think a lot more needs to be done. I think in the world itself, in the changed world, not just post-COVID, if you look at it frankly, democracy has failed to produce any equitable society. I think that everybody has recognized. So globalization and democracy need some changes. That's partly because the second stage, you cannot be only shareholder concentrated. You got to be stakeholder concentrated. It's your goddamn duty to give back so that we don't have so many disparities. And people are moving to that. I was reading a report that if you don't wake up on climate change, your most ambitious targets that you have today are not sufficient. So global warming has come from 1.5% over the last 10 years. It'll go to 5%. And that brings, we were all wondering why so many more floods, why so many more fires, why so much more hurricane, and then you have the health issues, and you have all kinds, and the bottom of the pyramid suffers. So people will have to move to the environmental side of it. And with digitization, I think you can do a lot more financial inclusion.
One of the big problems that we have at the moment is that many banks in India are flush with cash, totally loaded up with cash, and yet credit growth is really not there. Again, not talking about HDFC Bank, but even HDFC Bank has sort of slowed down its credit extension to retail borrowers. And all lenders are preferring to just stick with the highest rated credits. What do you think would really get banks lending again? Why do you think they are holding back?
No, I don't think they're holding back. In fact, I was at an official conference where I said, and they were saying that banks don't want to take credit risk. No, banks are not paid to take unnecessary risks. They are paid to take risks where they get their money back. But if you notice with the government guarantee, the SME got it. And if there is no GDP growth, how are you going to get credit growth? Next year, I can assure you the credit growth will be between 15 and 17%.
That's quite cool. System one.
Very simple. GDP will grow at 5%, inflation at 5%, and balance will be the new geographies, what digital will get you. So 10% is a given just based on nominal GDP. And credit growth traditionally has exceeded nominal GDP by 5%. And HDFC Bank should grow 20%. I have nothing to do with it. So this is no prediction. This is no nothing. We grow more than the market. That I can tell you that the banking system growth next year 15%.
Well, unfortunately, we have called this session predictions, but we'll accept that caveat that you've just given us. I mean,
no, I can give a prediction, but I have no responsibility for it. So no problem. It's like all these guys that come on CNBC every day. They predict the stock market, then it goes on its head, and then they start predicting it again with no remorse as to what they said 5 days back.
Yeah, well, I think, I mean, you know, I think that's slightly a different topic, but I think that, you know, we've got a...
I can be provocative, no? Why should only a journalist be provocative? I told you now, this is the license of old age.
But even before the pandemic, let's go backwards a bit. Even before the pandemic, banks were not lending.
Not correct. So before the pandemic, the GDP growth rate was about 5%. Inflation was 3%. And if you take into account banks and what if people put money in mutual funds, etc., and you take all of that, the growth rate was about 9 to 10%. Mm-hmm. Banks will be able to lend in a prudent manner as GDP grows. There must be demand. Right. At this point of time, we actually comparing apples and oranges. So when somebody talks to me that how much is the GDP going to be lower? I think that's irrelevant. 4 months of the year, if you're not working, you're comparing apples and oranges. The correct thing to do is to see, have we reached the run rate pre-COVID?
I think not everything in the economy, but a surprising number of indicators in the economy have reached that sort of
So that's good. So my country is good.
Actually, let's step back and, you know, think about how the relationship between borrowers and creditors has changed. I mean, you've had a very long view on this, but it seems like it's been a huge reset in the last 5 years. I mean, how substantial do you think that reset in the relationship between lenders and creditors has been? And what do you think that means going forward?
See, two things are happening. As far as the retail borrower is concerned, everybody started to become worried about his credit history. And the discerning where you're going to make profit is going to go where he has the least friction and the most convenient offering. And that trend will only accelerate. The top tier corporates have been moving slowly, a bit too slowly to the bond market. So that relationship is good. As they finalize and tweak with the solution of the bad bank and borrowers know that if they don't perform, they go into liquidation like Chapter 11 in the US, I think enlightened self-interest is a very good motivator.
So do you think that is how fundamental a reset is that in your mind?
I think that's a phenomenal change. I do believe it will help both the borrower and the lender, but it also makes sure that everybody will have to change to the new environment. Both in terms of processing, in terms of the products you offer, in terms of your speed of delivery, in terms of the convenience, and what will happen to the lower transaction costs. Hopefully, most banks should use that as a cushion to compete with the other competitors that will come in.
Okay, one more question on banking then from me. This bridges digital and banking. What do you think is the future of the bank branch in India? Because all over the world, a lot of banks are discussing how, you know, we don't need branches anymore, we can get rid of them. I think HDFC has something like 5,000 plus branches, ATMs. I mean, where are we going? What's the direction in India?
Direction is a bit of both. So one, the branch, the fundamental topography of the branch will change. It will no longer be the last colonial outpost offering everything and operations as well. So we have branches that are two-man branches because what you really need is branches will have the role of sales and service. So whether you take insurance, whether you take some of the more complicated products, people like to come and talk. Second is the elderly like to pass their time. Thirdly, it has a direct correlation with the amount of cash in the system. Today, cash accounts for a very large portion of Indian transactions. So will the number of branches change? I think so. The new branches that you require, there will be a hub and spoke. Will branches disappear? The answer is no. In some of the more upward areas, when I was walking past Manhattan as well as Oxford Street, I saw more banks than anything else on the street. You walk down Manhattan and you'll see every third shop or fourth shop is a bank. So in the outskirts, you will use technology, hub and spoke, and the people will be able to access through the mobile, which has a lot of power to it. You'll have to have your offering, you will have to have an offering, and the merchants will also be linked. So the more the connectivity comes, the cash usage will go down and the branch requirement will go down. But branch as sales and service. So I think Boston Consulting did a study and they said as acquisition, let me ask you, if you are based in a farmhouse in 40 kilometers from here, would you ask somebody who came marketing, where is your nearest branch?
Well, I think you're the one that's based in a farmhouse 40 kilometers from here.
That's true. No, but I'm saying, say you were based there and that was your permanent locale. Would you ask, where is your nearest branch?
Probably not. Probably I would. I don't know.
So in case you have a problem, you say, I need to talk to someone.
Yeah.
Because otherwise today, I can offer you everything on the phone. You don't need to come. And there are lots of our customers who don't come to the bank. My daughter doesn't go to the bank. They shop on Amazon, they pay, they order on Swiggy, they use their credit cards. And the worst thing of all is they're bloody sitting in the same room and texting each other. So the world's going to change.
Okay. Just a last question really for me before we sort of take a couple of the audience questions. You gave up 26 or 27 years ago, you gave up a very high paying expatriate job in Malaysia with Citibank. You've worked at the bank for many years. And you came back to India because you saw an opportunity to build a world-class bank. And you were completely correct, and that opportunity played out. So I think everybody really wants to know, if you have to sort of put your finger on what is the next opportunity in India, what is it? What is narrowly defined?
Oh, no, they're phenomenal opportunities. If you look at the first, let me tell you what are the opportunities. First, when you look at 60% of India, it lives in semi-urban and rural India. Mm-hmm. Even if you take 25% of that segment, and that is going to become affluent because infrastructure has moved there, because they're going into food processing, because there's localized manufacture, that creates a middle class equivalent to your middle class today. So that's the same opportunity that was there when I came 25 years. Plus, you have the ability through digitization and the extensive use of data to substantially increase your market share in the urban population. That's a major opportunity, number one. Number two, as you move forward, there are a number of industries that have losses of our car population, our motorcycle population, our consumption of FMCG, cement, steel, and all the companies that are coming out are showing that now. So there's a lot of opportunity. And then what are you going to do with digital? The opportunities in terms of employment, whether you're in marketing, whether you're in campaign management, whether you're in sales and service, whether how you use software as a service, whether you're making any kind of application to make people's life easier, is much easier. Then distance learning, then healthcare. So I think there's tremendous opportunity now. That's why I'm not going to really retire fully for the next 10 years.
Okay. One of the questions that's come in from the audience is, with the stratospheric rise of Bitcoin, how will India's stance towards it and other cryptocurrencies change?
I am not a favorite for Bitcoin. Bitcoin's got a long way to go. I'll go with what Raghuram Rajan said. It's waiting to bust. But if it doesn't bust, then it will be subject to a lot of regulations. Its demand is coming from areas which are not within regulations, and you can describe them on you're walking a thin line. So before Bitcoin really becomes a force, is when the regulators accept it globally. And it is without being subjected to regulations, which it is today on a very peripheral basis, it can't grow big.
Well, what do you think the most important, what do you think are the most important risks that have been brought about during the pandemic, like economic risks that have been brought around during the pandemic? I think that's just a counterbalance to your sort of unbridled enthusiasm and optimism. So I think that's fair.
No, see, when you look at risk, you have to examine it very carefully. So rather than making it complicated, if you had a bank that is working with a customer asset base that is not under strain, there would be some temporary strain which they saw for 3-4 months in terms of cash flow, and you would have to tide them over that. There would be some uptick, but it's not a disaster. It's a health crisis that morphed into a financial crisis. The bigger problem is how you will sort out the health crisis, because they have common, but the financial crisis always gets sorted out. So whatever is the risk, the worst is behind us.
Okay, so maybe I think another way to ask that question is in broader terms, maybe away from the banks. It's like, what are the sort of, when you stand back and look at the economy, apart from all the things that you see are great and the opportunities, where do you see what concerns you?
What concerns me is the unorganized sector. What concerns me is the bottom of the pyramid. What concerns me is the supply chain, which concerns me that we could be doing much better. And I think the companies that are moving very, very fast, and you look at the top tier companies, and this is globally, they've figured out the transformation, and the issue will be that a lot of small businesses will move to the larger businesses because of the saliency of delivery. So it's the bottom of the pyramid, it's the small scale guys, it's the organized workforce, it is making sure the infrastructure comes through, and let's hope to God we don't get a second wave.
Okay, so maybe like I think like many of us, you're sort of concerned about inequality not becoming too much of an issue here.
Inequality, I think the COVID has brought that out in spades. It's not only, I referred to this earlier in the interview, it's not only the inequality, it's the blatant ignoring of what climate change will do to you and your children. It's an understanding that we need much better healthcare in most countries, including the US, and we have the capability. It's an understanding that you have to look at how you will manage disasters like that, a backup plan, a disaster recovery, and technology can help you on that.
Okay. Mr. Puri, thank you so much for joining us today. I really appreciate your time, and let you go back to enjoying your time in the farmhouse and thinking about the future and what comes next.
Yeah, I'm working very hard on my pharmaceutical venture because I got to take it to NASDAQ in 3 years. That's Stelis.
You want to list your pharmaceutical company in New York, do you?
To the NASDAQ in 3 to 4 years, because it's got the demand. Same thing like HDFC Bank. It's got the demand. It's got the manufacturing. All we need to do is make sure we get the operational efficiency, scale, corporate governance, and the right market, and you should be seeing us there.
What exactly does Stelis do?
What it does is it's in biotherapeutics, so it's in injectables, it's in insulin, it's in vaccines, all of the things that will be needed for the future.
And you would be manufacturing those here, or is it an R&D?
They'll be manufactured here as well as outside, and in fact, the plants are all set up. They're almost working. We just got to scale it up. And that's why, fortunately, the guy Arun Kumar, who's a brilliant guy as far as the space is concerned, figured he needed my expertise, for which he's paying me well. So that's it.
I guess one question, though, it does beg, is why New York and not Bombay?
Sorry?
Why would you list it in New York and not in Bombay?
Because you get better value. Elementary, Watson.
Okay, thank you, Mr. Puri. Everyone, I hope you have enjoyed today's session. Please do join us for the other ones we have in store that continue into next week. And read us every day on breakingviews.com and reuters.com.
Thank you, Anna.